Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm here with a video about SPY5 or SPX5 from State Street Global Advisors. And it's the Spider S&P 500 UCITS ETF, so a European ETF that invests towards the S&P 500. And it has a really low total expense ratio of 0.03%. You will see it in the next graph that it's actually the cheapest ETF on the European continent that you can buy to follow the S&P 500. And you can buy one share of the SPY5 ETF for 549.50 Swiss francs. You invest towards 503 companies, so not 500, but 503. And there is almost 13 billion Swiss francs invested into this ETF. It's a fully replicated type, and the past 5 years it is up 80%. And you can also see that it pays out quarterly dividends, so for a year, and with a dividend yield of 1.03%, that's not too bad. And you will see in the next slide that actually the dividend yield went down a bit, but that's not a surprise, as the past year it is up, the S&P 500 is up more than 27%, and the companies in the S&P 500 didn't rise or rose their dividend with over 27%, so it's normal that the dividend yield is then going down. But still, I really like the fact that in the US you have a lot of companies paying out quarterly dividends, and this is also reflected in the payout of this ETF, which is really well distributed over the year. And on the 19th of April of 2024, so almost a year ago, on my channel, I put out the first video of a series about European ETFs investing towards American stocks, and the first one was about ETFs investing towards the S&P 500. And at the end of that video, I gave this overview, so it's still from the 19th of April of 2024. And here you can see that the dividend yield was actually 1.16%, so not 1.03%. But as I said, that's normal when the year performance is that high. And you have the EUSA from iShares, you have the VUSA from Vanguard, then you have the State Street Global ETF, then you have the Invesco ETF, and that one is special because it's an equally weighted ETF, so all 500 companies are equally represented into this ETF, and you see that this weighs on the year performance of the ETF, as you have a few stocks, especially the Magnificent Seven and Palantir and also Super Microcomputer, that really outperform all the other stocks on the S&P 500. So yeah, you can see that here reflected. But there the total expense ratio is 0.20% compared to 0.03% for the State Street one. So that one is truly the most the least expensive one, so the cheapest one of the bunch. And then you have the most expensive one, the XYLF, the Global X Covered Call ETF. And you know, my wife and I, we invest into the XYLF, and maybe we should have waited a little bit less than a year for the next one, because in this update, that updated table, you can see JEPI being present as well. The JP Morgan covered call that is present on the SIX stock exchange since the 29th of October of 2024. So far, it only went 2 times X coupon, and I don't know whether or not the last dividend is already paid out to the investors, but for JP Morgan, it always takes around 1 month before the dividend is actually paid out to the investors. So if you haven't received your second payment yet of JP, don't panic, it will come. But you can see that the covered call XYLF isn't actually that underperforming compared to the other S&P 500 funds, the normal ones then. And yeah, the equally weighted fund of Invesco, that one is still underperforming quite significantly the ETF from that follows the S&P 500 to the dot. But it is catching up, in fact. So it is underperforming less than more or less a year ago. And that's why I also said that maybe we should have waited to start investing into a covered call, because the JEPI one is 0.10% cheaper than the XYLF one. But in fact, we can't complain as Europeans, because in America, the covered call ETF that follows the S&P 500 from Global X costs 0.90%. So in that regard, I'm not complaining at all. And in actually not so long ago, we received another possibility on the SIX stock exchange to invest towards the S&P 500, and that's namely in the SPY5 that is now also available in US dollars since the 14th of January. So now you can buy one share for $608.80 as well. Maybe for some people that have a lot of money invested into the SPY5, they receive so much dividends that they can reinvest those dollars back into this ETF. And like this, they can reinvest towards the same ETF as they already had before. So State Street not only gave Six Swiss Exchange the possibility to invest into US dollar. This possibility was already available for the London Stock Exchange. So there it was already available in US dollar. And for the rest of Europe, yeah, on the Xetra, on the GetX, and on the Stuttgart Stock Exchange, you can buy it in euro. In Italy as well, and in France, in Paris, you can also buy it in euro. And you can see the tickers here. So all are SPY5. The only exception is in fact the one in which you invest towards the S&P 500 in Great British Pound, and then it's SPX5. But I should also mention that the Schiller PE ratio that you see right now on the screen from Guru Focus, it's at 37.9. It was at 38, in fact, so it came down a bit on Friday, but it's 41.2% higher than the recent 20-year average of 26.8, and it is 115.3% higher than the historical average of 17.6. So when you want to invest towards the S&P 500, I would say don't go in at once with a great lump sum. Just try to spread it out, because it's possible that, yeah, this is actually the top, and then it's going to come down again. And when you spread out, so with consistent cost averaging, you will average out your average price of getting into the S&P 500, and this sets you up for long-term success. If you invest now in one go, maybe it's possible that then it crashes down, and okay, you will recover. When you are young, you will recover for sure. Even if you now invest 10,000 euros, and then in the next months you always invest 500 euros when it's going down, you will average down as well, and then when it's going back up, you will recover quickly. But it's just also psychological that, yeah, when you go in with a huge amount and then it crashes down with 40%, then it can be really frustrating, and I don't want you to quit from the get-go. So just use your head and spread out your lump sum when you have one available. And if you want to go towards a cheaper market, the European market is way cheaper evaluated now than the US market. So maybe that's also a way to go, to invest more towards the European market or global market. So you have a lot of possibilities. I have a lot of videos about European ETFs, about to invest towards Europe or to invest globally. So check those ones out as well. And with that being said, I thank you for watching to this one. Please subscribe to my YouTube channel if you like this kind of content. If you hit that like button, that helps out with the YouTube algorithm as well. So if you want to hit that button as well, that's really nice of you. And thank you for watching to this one, and see you on the next one on my YouTube channel. Bye.